Sunrise Interviews is brought to you by Valley Strong Credit Union.
Welcome back. We have been following the coronavirus impact on the economy for several months now, and yesterday, U.S. stocks saw a sharp drop as investors weighed sobering economic forecasts and new data that indicated the pandemic is far from over. And joining us this morning to explain some of that in more in depth is Dave Anderson. He is the managing partner with MoneyWise Wealth Management. Dave, thanks so much for joining us once again.
Yeah, no problem, Alex.
So let's just talk a little bit about what we saw on Wall Street yesterday. We should note that right now, Wall Street is doing pretty well. The futures are showing a little bit of a bounce back from yesterday. However, we saw a very significant drop yesterday. The Dow Jones closing more than 1,800 points yesterday, or about 6.9% in the red. What does this all mean?
Well, it shows that we're far from calling this pandemic over. I mean, there's a lot of fear that there's a second wave coming back, and Wall Street is reacting to that. And I think mainly what Wall Street is reacting to is not knowing for sure what we're going to do about this. The Treasury Secretary yesterday, Steve Mnuchin, said we can't close the economy down like we did in the past. So that's got investors nervous, not knowing for sure what the near future is going to bring.
Okay, that's interesting that you say that. I'm talking about, not shutting the economy down like we did before. However, we are seeing some areas of the country, primarily in the South. We just ran a story talking about the concerns from Arizona to the Carolinas, showing significant spikes not only in new cases, but a higher rate in hospitalizations. Yesterday, officials in Houston, Texas said that they are concerned that they're going to have to shut down again because of the high number of hospitalizations and cases. These are traditionally areas that have not necessarily been impacted by this earlier on. So as we start to see some of these cities, some of these states move forward in reopening, and now we're seeing the effects of that, the negative effects of more cases and more hospitalizations. Do you think that we could be in a worse position going forward as we prepare for this second wave, or as we continue on with this first one?
I think it'll depend on the area where you live. You raised the story like in Texas, what's happening there. When we first shut down the economy, it was everywhere. We shut everything down. It didn't matter where you lived, it was shut down. I think now moving forward, it will be based on where you live. So you might see certain regions like Texas close back down, or certain parts of California close back down, which what that means economically is that it's going to stretch out the time that we recover from all of this. So, for those of you that were thinking, hey, the stock market's great, our problems are in the past, this is a little bit of a dose of reality.
Right. I want to talk about the recession. We threw out those words, recession, depression, several months ago, and now it looks like, investors are saying that we were officially in a recession in February. What does that mean, and what does the timing of that mean, considering that, back in February, we were talking about the coronavirus impacting the U.S., but it really wasn't impacting the stock markets until later in March. So what does this all mean about being in a recession in February?
Yeah, I was actually kind of surprised to see them call the recession in February, because as you mentioned, we didn't even get the first official death in the U.S. until I believe February 28th. So most of the job losses came in March. But what you have to remember is that before we shut down our economy, we were already in slowdown. We were already contracting a little bit. So what coronavirus did is it sped that up. So whether it was February or March doesn't concern me too much. What we know is we saw an incredible contraction, economy got smaller, and it did it at a rate of speed that we've never seen before. It was really wild.
The one thing that a lot of people are talking about and concerned about are jobs. And, the good news is that we are seeing a decline in weekly unemployment claims, but the numbers are still very, very high. I mean, they're just absolutely staggering. When you look at these numbers, and you do see a positive trend here, but again, it's still very high, how do you make out all of these numbers? Where are we?
Yeah, well, as you pointed out, even though it's better, which we have been getting better, it's still really bad, numbers that we have not seen since the Great Depression. So it tells us that things are really tough right now. Now, we have the federal government that are talking now about a second round of stimulus, or this would be like the third or fourth round of stimulus to help push the economy forward. And I think with what we've seen recently over the past few days, especially yesterday, is it increases the likelihood that we are going to see more stimulus, whether that's another round of stimulus checks or tweaks to unemployment. I think we're going to see something.
All right, and we are running low on time, but I got to get this question in really quick. For those people who still have their jobs right now and things look like they could keep their job, should they be preparing for the worst, be preparing for a different turn?
Yeah, absolutely.
Okay.
Even if you're secure right now, be ready for things to slow down. If they don't, great. You're happy and all you have is some extra money on the side. But save cash, be ready, because things could slow down.
All right, Dave Anderson with MoneyWise Wealth Management. Thanks so much for joining us. We'll see you next Friday.
You bet. Thank you, Alex.